Have you ever wondered how the wealthiest individuals on the planet consistently grow their fortunes? Welcome back to Fun Financial Insights, the channel that makes finance understandable and exciting, even for high schoolers. In today's episode, we're diving into the world of investing and financial wisdom, focusing on the unparalleled insights from one of the most legendary investors of all time, Warren Buffett. We'll uncover the secrets behind how the rich get richer and how to prepare for the impending 2024 recession, drawing from the wealth of knowledge inspired by Warren Buffett. Watch till the end to learn the 3 key takeaways from Buffett's philosophy of how the rich get richer. First, let's explore the strategies and wisdom shared by Warren Buffett that can help you pave your own path to financial prosperity. Here are 3 philosophies that guide Buffett's increase in net worth. Number 1, be fearful when others are greedy. Warren Buffett's approach to wealth building is famously rooted in long-term value investing. He doesn't chase short-term gains. Instead, he seeks out businesses with strong fundamentals and a competitive advantage. In 2008, the New York Times shared a timeless piece of advice: be fearful when others are greedy. This nugget of wisdom reminds us how it's essential to exercise caution when everyone else around you is blindly rushing into their investments. Number 2, bad news is an investor's best friend. Continuing on this theme, Buffett stated that bad news is an investor's best friend. Buffett's wisdom is that when the majority of investors are exuberant and overconfident, they tend to buy assets at inflated prices. In contrast, during economic downturns or market crashes, when fear prevails, asset prices drop, creating buying opportunities. It's during these times that smart investors scoop up stocks and assets at discounted prices. Number 3, historical evidence. Buffett's advice is not just a theory, it's grounded in historical evidence. Every economic recession or stock market crash is followed by an even stronger recovery. Prices often double in a matter of just 1 or 2 years. It's a cyclical pattern where the market consistently recovers in all historical instances. This cyclical behavior is at the core of how the rich get richer. Now that we've grasped the building blocks of Warren Buffett's philosophy on how the rich get richer, let's apply it to the ever-changing financial landscape. It's crucial to be prepared for challenges that may lie ahead, such as the predicted 2024 recession. As Forbes predicts, it might not be too far away. Let's delve into what's predicted to unfold in the next 3 to 6 months and explore the promising opportunities at hand. Pay close attention because what you're about to hear will empower you to strategically position yourself for lasting wealth creation. First, let's unravel the mysteries behind the economic situation you'll likely be navigating in 2024. During economic downturns, unemployment typically becomes widespread. But even if significant layoffs don't occur, other challenges like substantial wage cuts and the devaluation of various assets, including stocks, energy, food, and services, tend to become prevalent. These effects ripple globally and have profound consequences. The risk of the recession also increases with extreme weather events becoming increasingly synchronized. Intense droughts and heat waves can disrupt production, cause food shortages, stressing global supply chains and raising household expenses. Food scarcity in certain regions could even lead to widespread migration or, in extreme cases, conflict with significant political ramifications. Many companies are revising their forecasts downward, anticipating slow or negative growth. This marks the highest level of recessionary risk in a decade. Consequently, layoffs are becoming more common, and cash-strapped customers are cutting back on their spending due to reduced incomes. As a result, companies are streamlining their expenses, often leading to mass layoffs. Now, you're probably wondering how all this bad news can translate into golden opportunities for investors, like Buffett's beliefs. To gain more insight how to prepare for recession, let's take a look at how Warren Buffett is doing. CNBC's Becky Quick had the opportunity to ask him whether he believed a recession was more likely. While Buffett didn't predict a recession, he noted that many of Berkshire Hathaway's businesses are experiencing increased challenges. Here's how he's preparing. Number 1, build liquidity. Before a recession hits, it's wise to build liquidity. Buffett's strategy is to keep plenty of cash on hand so that you can make intelligent decisions rather than having to make forced decisions. As he stated, they want to be ready for anything that happens. At the end of 2022, Berkshire reported a cash position of $125 billion, including cash, cash equivalents, and short-term investments in U.S. Treasury bills. While you may not amass billions like Berkshire Hathaway, you can avoid assets that tie up your cash unnecessarily. Number 2, put your money into proven companies. During a recession, even blue-chip stocks can take a hit. But as Buffett points out, this is usually a temporary setback. He believes in a business-as-usual approach. They aim to buy good businesses run by people they like and trust at a reasonable price. Most major companies will continue setting new profit records in the long term, so invest in companies with a history of success. Buffett's approach to thinking long-term remains unchanged. He wants Berkshire to be the last person standing, focusing on long-term, regardless of economic conditions. Don't abruptly stop investing or go abroad with investments. Stick to your strategy. Number 3, avoid putting all your money into no-growth assets. While it's tempting to stash your cash in risk-free checking and savings accounts, Buffett advises against this. Equities are likely to outperform cash over the next decade, so consider keeping a portion of your investments in the stock market. If you're finding these lessons helpful, don't miss out on the rest. Like we promised at the beginning, stay tuned to the end and learn key takeaways that can help you too get richer during or outside a recession. Subscribe to Fun Financial Insights for even more mind-blowing lessons and embark on the second half of this incredible preparation to improve your finances. Hit the subscribe button and let's continue this journey together. Let's consider a few assets we can invest in. Let's not forget the Warren Buffett's advice isn't just about preparing for a recession. It's about achieving long-term success in the world of investing. So apart from cash, here are 2 highly recommended assets you can invest in to increase your wealth despite the economy. First, real estate. Now, while real estate markets vary significantly by region, some areas may continue to thrive under any economic conditions. A nationwide housing decline is relatively rare, and over the past 6 decades, significant drops in home prices have been infrequent. However, experts on Wall Street suggest that national housing prices might see a 10% decrease, with a more pessimistic scenario projecting a 10 to 25% decline if interest rates continue to rise. Notably, valuable markets such as Florida, Arizona, Idaho, and Southern California could experience declines of up to 30% from their peak. This downturn could last for more than 2 years before stabilizing. In the grand scheme of things, these shifts may not significantly impact homeowners, especially those with fixed mortgage rates, planning to stay put for the next 5 to 10 years. However, for those considering property investments or new purchases, this downturn could present appealing opportunities. Also, gold. Historically, gold has served as a hedge during recessions. Its value has increased in past recessions, such as in 1973 and 1974, when the stock market experienced significant declines. Gold rose by 73.49% and 67.4% during the same period. Similar patterns occur in 2002 and 2008. During times of low confidence in the Federal Reserve and governments, people tend to turn to non-fiat currencies, and gold becomes a safe haven. Think of it as a bet against the dollar during recessions when confidence in central bankers and government is low. And the question remains, should you follow Warren Buffett's lead? Based on his track record, you definitely should. Now, here are the promised key takeaways from his wisdom. Takeaway number 1. Building up a cash position is a wise move when a recession looms. Stocks often decline during these times, creating opportunities for intelligent investments. Key takeaway 2, adopt a business-as-usual approach. Don't let economic forecasts disrupt your investment strategy. Continue looking for well-run businesses with solid management teams and attractive valuations. And key takeaway number 3, maintain a long-term perspective. Recessions are temporary, but the stock market's historical trend is long-term growth. Following Warren Buffett's lead in thinking long-term can be highly rewarding. There you have it, folks, our in-depth exploration of how the rich get richer, inspired by Warren Buffett's wisdom. and how to prepare for the impending 2024 recession. Remember, financial success isn't reserved for the elite. By embracing long-term value investing, building liquidity, and staying patient during economic downturns, you can pave your own path to financial prosperity. If you enjoyed this video, be sure to give it a thumbs up and subscribe for more engaging financial insights. Until next time, stay financially savvy.